Hey everybody, welcome to the walkthrough for Chapter 6. Chapter 6 covers investing and financing activities. So if you remember back to accounting, that means the purchase of large assets, long-term assets, such as vehicles or equipment or buildings, also the purchase and sale of long-term investments and equity transactions will also be covered. Things like the owners putting money into the business. And maybe paying out dividends to the owners, those sorts of things. We'll also look at long-term debt, like taking on a long-term note, either for cash or to purchase an asset. So let's just go ahead and get started. So I am going to start on the fixed assets section, page 117. And what we're going to be doing is recording the acquisition of fixed assets. And I've noticed that this instruction book likes to use sort of a check-based system. Like, in other words, you kind of acquire everything by writing checks for it. And that there's other ways to do it, but that's how they do it here. So it's fine. So I'm actually gonna skip down to number 3. The steps 1 and 2 is just getting this sample company file open. So for step 3, we're going to click the new icon and we're going to click new check. So we're telling QuickBooks we're writing a check. And then from the payee drop down, we're not going to use one of the existing payees. Instead, we're going to tell QuickBooks we're adding a new one. And we're going to call this vendor Sunset Auto. It's already selected as a vendor. So we'll hit save. And so all we're doing is we're creating a new vendor right here from the check writing system instead of having to go to vendors, add them, and then come back here. All right. So step 6, accept the given payment date and check number. So we just don't have to change anything. Step 7, type truck, original cost in the category column of line 1. So here we are on line 1. We'll type truck, original cost. So this is saying this is the cost of a truck that we're recording. And we're going to type 2,500 in the amount field. That's step 8. And so this entry will tell QuickBooks, deduct $2,500 from our checking account and then record the purchase of this asset called truck in its original cost account for $2,500. That's what we're telling QuickBooks here. So we're going to hit save and new. This is step 9. And now we're going to write another check to a payee that's already in our system called Tanya's Nursery. Let's see. We're going to go to the category box and we're going to add new, meaning this is a new category that we're setting up in QuickBooks. And for the account type, we're going to select fixed assets. This is step 12. And then under detail type, we're going to select machinery and equipment, which is step 13. Step 14, we're going to leave machinery equipment here as the name. We're going to put a check mark here in track depreciation of the asset, but we're going to leave the original cost and depreciation blank because I think we're about to hit or add that original cost. So we're going to hit save and close. So that was step 14. So we're still in this check. We selected machinery and equipment. And then we're actually going to change this to machinery and equipment, original cost. So what we're doing is we're telling QuickBooks this is the original cost of the equipment as opposed to any depreciation on the equipment. We're going to go to the amount line. We're going to type 1,000. So what we're telling QuickBooks is deduct $1,000 out of our checking account to purchase an asset called machinery and equipment original cost. So step 17, we'll hit save and close. And that will do it. We've now purchased 2 assets. The first one called truck, and then we recorded it in the original cost sub-account of truck. And then machinery and equipment, we've recorded in the original cost sub-account of machinery and equipment. All right, so that ends the fixed assets section.